Lightning is working, Lightning is scaling. We are in a dollar denominated world. And until there's some stability in like price longer term on Bitcoin and like greater adoption, then Bitcoin is going to be viewed as like a store of value. What I think is like really interesting within Lightning and probably is going to happen in the back half of the year is like when you have stables or dollar denominated stables, right, that are able to be transacted across the Lightning network, and the Lightning network and Bitcoin as a whole is abstracted away from the user even having to understand what is happening, then that's a very profound use case.
Okay, everybody, so welcome to a new episode of the show. Today I have with me Nico from Ego Desk Capital. What a name, Nico. What's behind this aggressive name, I would say?
Yeah, hi, Jad. Thank you for having me. I'm Nico Lechuga, one of the founding general partners at Ego Death Capital. The name, yes, it grabs you right away. We are a venture capital fund that invests in companies building on top of Bitcoin. And when we were thinking about founding the fund, Andy Pitt, Jeff Booth, and myself, one of the things that we really wanted to encapsulate within the name was this transition of the monetary system that we have today to a more equitable, more decentralized monetary system of the future built on top of Bitcoin. We felt like this is one of the most profound things that could potentially happen for us as human beings. And when we were thinking about events that have this type of impact in people, like the ego death experience, it was something that we felt was a strong parallel. And so we'd come up with it in a branding session, Andy and I, and then it was positioned to Jeff, and he jumped on board with it. And we weren't sure at the time period when we announced it how the community would respond to it, but it has been very, very well received, I would say, from everybody, from people on Bitcoin Twitter to very esteemed people within the traditional financial sector.
So why is it the death of the ego? I don't get it.
So the ego death experience, like a lot of times people will fight that like as it's happening, right? In the same way that the modern monetary system is fighting this transition from a fiat-based system that can be controlled to something that's more decentralized, more equitable for everybody in the world, a Bitcoin-based monetary system. And what we end up finding is like through both these experiences, the more you resist, the harder it's going to be. But as soon as you give up your own ego, you give up you've preconceived as what matters to you, you're able to transition to this better tomorrow. And so that's what we wanted to encapsulate in the fund name. Also, too, it's a fun name I don't think anybody forgets after it's said.
Definitely. So before we go into like the fund and the focus and the companies you invest in, can you walk me through your own personal Bitcoin journey? When did you fight your ego?
Yeah, I can walk you through it. So I started off my career in private equity, predominantly looking at emerging and frontier markets. I would say like this primed my brain for the fact that our like monetary system was broken. In a lot of the projects that we would deal with in these developing markets, there would be a currency component to it. And it always seemed like very inefficient to me of like how quickly technology moved, how quickly we were able to send information around the world, why there would have to be these disparate monetary systems around the world controlled by different governments, and how that factored into projects. So I think like that at the beginning, like primed my brain for something different.
But when you talk about frontier, what do you mean? Which continents, which countries? Do you have any specific examples?
Yeah, predominantly Western Africa. So the region with like Ghana, Guinea, Cote d'Ivoire, Nigeria. Those are some markets that we were looking at the time.
Yeah, there they have like the French CFA, which is complicated to exchange in and out of, right?
Exactly. Yeah. So this I think like was the beginning of like priming my brain of something else different, like desiring something else different. That the current system that we had was not effective. I would say from there, like the belief of the store of value for Bitcoin made a lot of sense, as like one of my partners within the fund, Jeff Booth, I'd come into it in the late 2010s and shared that with me. And so that made a ton of sense as far as, okay, a part of portfolio allocation being put into this thing that is immutable, cannot grow past 21 million, is completely decentralized and no one can control. What really blew my mind, I think, from a personal like investor entrepreneur standpoint, was the fact of at a certain point there were going to be some pretty interesting, in our belief, companies building on top of Bitcoin, using Bitcoin as a monetary and information network. And that really like piqued my interest and made it something of like where I wanted to spend the majority of my time.
Okay, so you were in the venture capital private equity space, and you just moved into Bitcoin because you believe that it's a superior opportunity potential and superior monetary system. But why do you think Bitcoin equities would outperform Bitcoin?
Yeah, this is a great question. So we right now, I happen to be raising a second fund or getting everything going for a second fund, and this is the most asked question of any potential investor in the space and anybody in the space at large. Is we've seen a huge growth in Bitcoin's performance. I mean, we constrained for the past year, but if you want to look on a broader horizon, like it's staggering. There's really nothing from an asset standpoint that has outperformed Bitcoin. The belief that we believe is if companies are denominating their cash flows in Bitcoin or they're able to cash flow Bitcoin, as a lot of these companies that are building on top of Bitcoin are, and they're utilizing networks like the Lightning Network, this is the one place in the world that we believe can have the potential to outperform Bitcoin. There's two things that happens with these companies. The entrepreneurs deeply understand, as one of my partners, Preston Pish, would say, Bitcoin's compounded annual growth rate. And so any time period where they have free cash flows or are generating free cash flows, so we're talking about a little bit later stage of a company, there's a calculus that happens where the companies either have the choice of reinvesting that capital into their company if they believe that they can outperform the compounded annual growth rate of Bitcoin, or they're going to keep their treasuries. Now, these are profitable companies, so they're covering their operating expenses in Bitcoin. And in that way, there's this kind of multiplier effect to those companies. What we're able to see is some of the companies in the space, and one in particular, one of our portfolio companies, LN Markets, when the Bitcoin's price appreciated by, call it 43% over a 6-month period, LN Markets as a platform's volume grew by 9.2x. And so these type of situations we feel like are very unique to the space that we're investing in. And these are the opportunities that you're looking for companies that have the ability to outperform Bitcoin's hurdle rate, as we call it.
Okay, but if you look at the two referentials, so you have the US dollar referential and the Bitcoin referential. So you're operating in a Bitcoin referential and you need companies to outperform Bitcoin. It is already hard for VC funds to outperform to generate performance in the USD referential, although it is built in a way that if you buy the S&P, you just outperform it. And when it comes to Bitcoin, it's like built in the other way around. It's built like to be very hard to outperform. Actually, it's one of the best performing asset classes out there since its creation. And if you're a Bitcoiner, you believe that this trend will continue. So what are the adjustments that you make on top of the traditional VC approach to when you're approaching a Bitcoin company?
What we do, and this is unique, I think, to the space of the Bitcoin funds and Bitcoin venture in general, is what we have found internally at our fund is we want these companies to be profitable a lot earlier. So historical venture, and this has changed a bit in the past like 18 months, especially with the growth within interest rates. But historically, like the profitability or even finding revenue for certain venture capital investments wasn't paramount within the space. Within Bitcoin companies, what we find and what we're pushing for is for earlier profitability. So companies that are call it like in between a seed and an A, having the ability. So it's really a choice of whether the company can become profitable and really take back a lot of control. The profitability is key for a couple reasons. It doesn't require them to look for capital outside of like the Bitcoin ecosystem, so that they become the ones that are deciding where they're raising, who they're raising from, and that's key. And we can get into that more of like how some alt funds, crypto funds look for certain things that Bitcoin companies do not have, like tokens.
Yeah, I'm going to address that later on.
Yeah.
So just interrupting you here. So what you're saying is that you want to go quicker into profit, but that means, I mean, I understand it from a perspective that the quicker you are, the less time you're gonna waste to time to market to generate sats, I would say. And because you have such a performing benchmark, you cannot wait 5 or 10 years investment. Like you cannot build Tesla on Bitcoin. You have to have so much opportunity cost actually compared to Tesla's opportunity cost, which was just the treasury bills and plus
Right.
a premium basically. So doesn't that create like a limitation in terms of disruptness of the Bitcoin equities or Bitcoin companies building the next layers of on top of Bitcoin?
In our opinion, no, because what ends up happening is the company then has a choice with profitability. So you have this choice of, hey, we can cash flow if we need to. And then if we want, what we're going to do is we're going to raise fiat. So the fiat for these Bitcoin funds that they're deploying into these companies, the Bitcoin companies are then able to use fiat. So whether it's dollars or euros or Swiss francs, depending on the jurisdiction that they're at, to fund additional growth. And I think that what you're getting into is like, have you capped growth of these companies by looking for profitability earlier? What
Yeah.
we're really looking for is like the ability for the entrepreneur to turn that switch. So if they want the switch on and the company being profitable, then that's great. But if they want to, because like you don't want to generate profits if there's a lot more growth, like that's green space for the company to run, right? It actually ends up hurting the company as the company is growing faster than it should be cash flowing. And so that's where these additional funding rounds, in our opinion, come in. But it comes instead from a position of strength, where historically, like companies have had to come into some of these funding rounds with not a lot of things stacked in their favor, as we've seen over the last 18 months. These type of companies that then have the option as to like when they're raising, who they're raising from, how the capital is being deployed, and whether they're turning on and off profit, like it's giving more control to the companies. Whereas historically, what has happened is like in a venture space, the companies, in our opinion, are always beholden to the next round. You
Hmm.
raise a seed, the company's cash flow negative. You need to raise an A. If you raise an A, you need to raise a B. You raise a B, you need to raise a C. Now let's take the company public. Now at this point, like if the company, as we've seen in the last 18 months, is not able to raise the next round, like good companies will fail, or good companies will have to have down rounds, which like change the entire like cap structure of these companies. And so what we're looking for, I think, within this space is the ability for that entrepreneur, that just the ability to turn on profitability at some point. It doesn't mean that they're going to, because you might want still extremely high growth, or being in this period of extremely high growth gives more power back to them and reduces a risk vector of failure.
Okay. And so going back to what you said earlier, that compared to other Web3 funds, if we want to call them like that, these companies don't have tokens and don't have tokenomics, which have been very popular in the Web3 VC space. So when you look at the whole VC ecosystem and you look at how much you're raising and your other funds, Bitcoin focused, are raising, and then you compare them to how much the Web3 VC funds are raising, it's like the multiples are like
Yeah.
so different. and which makes you question if there is any value in these Bitcoin companies, or if it's not like a lost battle because of the tokenomics. So you have these VC funds pouring money in and making a quick buck on the token, and the money raised can be spent on marketing, which hypes up the token, and then build a business that will be profitable or not. But you already have such a competitive edge when you're running a VC fund, because you're profitable just on the token allocation you're going to get, compared to a Bitcoin fund where you don't have a token.
I think that there's a huge ethical problem with this, right? So you get into two different kind of like viewpoints of like what's going on. So you have the viewpoint of the VC fund, and then you have the viewpoint of the company. So from the viewpoint of the VC fund, the viewpoint of the VC fund loves this for a short-term gain because I can lay out exactly how the tokenomics work. So generally, there's a 24-month vesting period with tokens, what we've seen historically within deals. There's a 6-month cliff. So after 6 months of investing in the company, you're able to sell a quarter of the tokens that you've got. And typically, there's a token warrant that gives you a 1-to-1 ratio of like issued tokens to the equity that you own within those companies. So after that 6-month period, the VC fund, I think to your point of the profitability of the fund, is able to dump those tokens on retail. Now, in our opinion, like that doesn't create value. That what it does is it changes who's holding the bag in these companies. What we look for in companies in Bitcoin are companies that have real world utility. And while there are very interesting like developers in these other spaces, and they're building some very interesting protocols, we think that the tokenomics of a lot of these and the differing viewpoints from the VC fund to the company have clouded the building of these companies. And in some cases, they've created an attack vector. So the VC fund has very little concern for the equity within these companies. They want just the tokens, and they want the ability to dump those tokens onto retail and pay their investors back in a very short order, which is like why these things are created. I think the points of that you're getting into of marketing or marketing dollars that the company can get is, yes, you're able to raise valuations at higher valuations. But the reason is because the venture capitalists are less concerned with the equity, the traditional equity within those companies. All they want is the tokens. And they're less concerned with the long-term viability of those companies because they've de-risked their investment or made a profit on their investment in very short order. So whether the company is here tomorrow doesn't really matter to them. This, we think, like works against one another. And while, yes, a lot of money has been raised for this altcoin space, it doesn't mean, in our opinion, that there's going to be sustainability to those companies over the longer term. We think that the traditional venture model, which is one where you have a 10-year fund life and you give companies, you're buying real world equity. You're buying equity in companies in Delaware C Corp or whatever the parallel would be in their jurisdictions around the world. And you're aligned with the entrepreneur and you're not diametrically opposed to them potentially of like how tokenomics create the situation. That allows you to build companies that have longer term staying power. What we'll end up seeing, I think, from our standpoint, and like that's our viewpoint, is we think we'll outperform those short-term gains of those altcoin ecosystems because the companies that we're building have these staying power and we think have more profound like real world impact. But that's to be determined. I definitely get why a venture capitalist would want the tokens, and I get why an investor in the venture capital fund would want to be part of a fund that had that. But I think it comes down to a question as to what kind of value are you really looking to attain longer term within the world, and do you actually want to build like sustainable companies? And if that's the case, then I think that it's tough to do both.
Yeah, I totally get it, and I'm playing here the devil's advocate
Course,
because
yeah.
trying just to challenge the reasoning. If you think about a VC fund funding these projects, There's every day an entrepreneur who comes up with a token idea and the tokenomics and the blockchain for a certain use case.
Yeah.
And then he gets money from the VC fund. He gets, they call it governance token, which is like,
Exactly. Yeah.
but people seems to value it not because they believe this governance will bring them so much value in terms of satisfaction or user experience or whatever, but in terms of how much money they're going to make trading that. So you have like, it's like if you stand at the entrance of a casino and you start convincing people not to play because the casino's odds are in their favor, you're not going to convince anyone not to play. It's a lost battle. So and if you go and say these governance tokens have no value, they can argue to you that Bitcoin has no value initially, and a lot of traditional finance, like Warren Buffett, thinks it's rat poison squared. So who are you to tell them that the governance token has no value? They want to play this casino game, and they're gonna keep playing it. And okay, ethically, I wouldn't myself run a casino because I don't think it's an ethical business, but some people want to play and some people are willing to start this business and will stay there forever. Don't you think?
So I think this is more a commentary on how broken like our current monetary system is today. You hit on something pretty paramount from here. In us as human beings, like to gamble, and us as human beings like the odds of having something and having it go 100x on you. And as you see, like the people that are loudest in the room, right, are the ones that are talking about those type of returns, not the ones that are watching their like lives potentially shattered from it. But I agree. You can't, and I don't think that you should control what humans are able to do. I think we're all making our own choices. I think that the question that you come down to with not the retail mindset, and I think the retail mindset is quite easy to understand. And it goes back to how broken like our current economic system is. If people are not able to make ends meet, if they're not able to buy houses, if they don't see like a brighter future, then they're going to start trying some of these riskier things with their money. And in that case, like some people are going to get very lucky and other people are going to get burned. And the entire component of these governance tokens or marketing tokens is if you are very early into them, you can make a lot of money, especially if there's a lot of marketing that's laid out behind them. I think that the ethical problem with that is at what expense? Like who is being burned for that to happen? And the bigger question is, well, what real value has been created by that longer term? And so venture capital was originally founded as like ad venture capital, and that the ad got dropped from it, right? These are supposed to be like your cowboys of finance that are funding what is on the cutting edge, the cusp of technology, of finance, of like what's going to move the human race forward. And if we've simply created a different casino game and we're swapping money from like one party to the other because we've given them a different game to play, like is that the best use of venture capital dollars? Is that driving the human race forward? Or have we simply created a Candy Crush with like some tokens on it and people are addicted to that? And we understand why. You understand the motivations behind it from both the VC side and from the retail side. And you understand it from the investor side even. But it's a very short-term gain in our opinion, and it isn't at this point driving like real world utility.
Okay. Let me explore another topic, I would say, still around Bitcoin companies. When I see how much capital is allocated to Bitcoin and to Bitcoin ETFs and to Bitcoin itself and how much volume it's trading, like it is a huge market cap today with a very decent volume. But then when you look at Bitcoin companies and how much capital has it raised, again, you look, there's a huge difference. And which makes me wonder if Bitcoin price, the price of Bitcoin, is not a noise that is taking investors' attention away
I think that one of the things that's misunderstood here is the standpoint of like Bitcoin as a store of value and Bitcoin as an information network. So what you're hitting on is like Bitcoin as a store of value has grabbed a lot of attention and will continue to grab a lot of attention as Bitcoin's inherent price goes up. The issue about Bitcoin companies is, and like why people created a lot of alts before it initially, was the fact that you couldn't build on Bitcoin. Like really until about 2020, a little bit farther on, where you have Taproot as an upgrade on the main chain, you have the Lightning Network coming to maturity. We have the Taproot Asset Protocol that's coming out in the back half of the year. Some VCs are very interested within the ordinals, and like Runes, which is being developed right now. You hit on some L2s that are coming out because of BitVM. All of these little, call it like pieces, building blocks, were not available even a few years ago. And so what ended up happening is like entrepreneurs went to other places where they could build. It was easier for them to build. And so this is really able to understand from like a motivation standpoint.
You mean that the evolution of the Bitcoin protocol being slow didn't allow before to have the monetary network, basically use cases, and the Lightning Network? I always wondered, like, how come the Lightning Network? I mean, I use the Lightning Network almost daily. We built a Bitcoin Academy app where people can learn and get some sats on the Lightning Network, and I find it like such an efficient way of transacting. But when I look at the adoption and the volumes, I would have imagined like, okay, you can send an email or you can go to the post, you send an email. So this should be like instant adoption, but you still don't find it. And even the companies, like all the Bitcoin wallets that are out there, the Lightning ones, are still like they're very old style apps, I would say, or Web 2 apps instead of Web 3 apps, I would say, or something like that.
I think that what you hit on though with like the Lightning Network is Lightning is working, Lightning is scaling. Where we're at though from an adoption standpoint is people still they're viewing Bitcoin as a store of value and less as a medium of exchange. I think that we are very much like we are in a dollar denominated world, and until there's some stability in like price longer term on Bitcoin and like greater adoption, then Bitcoin is going to be viewed as like a store of value. What I think is like really interesting within Lightning and probably is going to happen in the back half of the year is like when you have stables or dollar denominated stables, right, that are able to be transacted across the Lightning Network, and the Lightning Network and Bitcoin as a whole is abstracted away from the user even having to understand what is happening, then that's a very profound use case.
Well, why don't we have that already?
The network wasn't ready for that yet. So that requires like the Taproot, what's now being called the Taproot Asset Protocol, was before called Taro.
Because I saw there's a Lightning Network that does stable sats. So it's Blink or something like that.
So there are a number of companies that are working on like stable sats. Generally, this works with some type of derivatives exchange and a peg from here, and a spread that, in our opinion, requires like a pretty profound like liquidity provider in order to be a part of that equation for you to allow to have like stable sats. I think what's going to be probably more interesting, more profound from a network standpoint is in the back half of this year when you start to have these stable coins that are issued on top of the Lightning Network through the Taproot Asset Protocol. Talking to Ryan Gentry at Lightning Labs, it looks like it's in the back half of this year. I think at that point, then it opens up the use cases of these wallets, right? You're able to go from having a Lightning wallet that people in developing worlds. And I think a lot of the things is like you and I sit in developed parts of the world. And so finance generally works. I mean, I can talk of a number of cases where it doesn't and it's broken down. One in particular yesterday, we were trying to send a wire and it was completely broken. But generally it works in these developing markets. It's very fractured. And so but these people denominate their savings in dollars in a lot of those markets, or they want dollars. So if you're able to meet them where they're at and have this mental model that exists, they'll be using Bitcoin's network to transmit stable coins across it. And if we look at like growth in the use cases of other ecosystems, some of the most volume comes from these stable coins that are transmitted across like Ethereum, Solana, and these like trading pairs, right? So I think that will be huge. I think it'll turn a lot of big wallet companies into pseudo neobanks in these other type of markets, and I'm really excited about it. I think that it's something that isn't being spoken about enough.
Okay, and for the entrepreneurs listening to us, what's your tick box when you look at the investment in a company, and if somebody's building on Bitcoin, what does he has to do to qualify for investment in your fund?
Yeah, it's a great question. So we only invest in software companies that are building on top of Bitcoin. We don't invest in any mining or any hardware. We see the specificity in the software companies. From Fund One, we investing at the seed stage, so earlier stage companies. We generally want founders to have a 10x advantage over anybody around them. So they've found this like key insight that has an order of magnitude in some way, shape, or form. We want them to be able to like create and sustain a competitive moat. We're looking for a way for them to generate revenue probably in the next like 18 months. As we see that as a key path within here. You don't have to be profitable, but you being able to generate revenue, like getting to that Series A metric, we see is like really, really important. We want you to be aligned with Bitcoin. Like we are only investing in Bitcoin companies. And then the entrepreneur. So there's a number of characteristics that we look for from like grit, integrity, just clear communication from a team standpoint. And we think that like building an early stage company, it's tough and it can be lonely and it requires a great team. It requires people that are able to find solutions and like are solutions inclined. And so we're constantly looking for those entrepreneurs building out a brighter future and tomorrow.
Okay. Before we wrap it up, I wanted to raise a last question to you about your side business about spices. I'm a big fan of spices myself. And I wanted to know, like, I've seen, like, I don't know if it's a characteristics that you find in the Bitcoin mining community or in the Bitcoin community, sorry, in general. But I've seen a lot of Bitcoin of spices fan in the Bitcoin community.
Yeah.
Is there any correlation between these two?
So I think I was listening to like an Andrew Huberman interview a while ago, and I think there are certain characteristics of like if you like spicy food, right, you're generally probably like more inclined to be more adventurous, I think, within life and all other facets. So it makes sense if like you would have early adopters in like Bitcoin being inclined with it. Yeah, I have a hot sauce company called Senor Lechuga Hot Sauce. Actually, in between private equity and here, like it was the company was founded, and it was a passion project that just kind of took off. And we have a bunch of different spicy products. We've done collaborations with everybody from a Shake Shack to big media personalities, and it's a lot of fun. I think it's a way to connect, in my opinion, with entrepreneurs. In that I've run a profitable company since month 4, and like scaled it, taking no investment in that company. But also too, it's like a fun project. The people that we get to interact with in food are great. There's a number of people within Bitcoin. Like there's a bar in New York called PubKey. We have a hot dog collaboration with them using the hot sauce at like a Bitcoin bar. And it's
Yeah, I
fun.
mean, I find like the dopamine release and
Yeah.
ups and downs that comes from spices. I mean, to bear the volatility of the Bitcoin price and the ups and downs and the spikes and all these news flow, I find it like there is some common grounds. Unfortunately, we're going to have to wrap it up. Thanks a lot for joining the show, Nico. And from what I understood, so you're raising capital now, and you're looking for companies that are building on Bitcoin. So everybody listening to us can reach out. And if you have any news coming, please share them with us, and we'll have you back on the show to announce them. Thanks a lot for coming.
Thank you so much. Thank you for having me.
Take care.